reputation like this that you talk to media only when there is fear and gloom and doom. You should come during happy days also.
No, actually, Nikunj, it's better to come during these days, because during happy days, all the cheerleaders of Dalal Street, you know, the big bulls and the, you know, all the radio jockeys, etc., all of them are on the program, you know, telling everyone to buy. But at this point of time, very few of them to come out and actually stick their neck out and take calls. So in a way, it's a good time to actually come in the market and try and figure out what's happening when no one knows what, no one has a clue really.
So what
it's
is
good
happening?
To stick
Why
your
don't
neck
you tell
out,
us?
Get it wrong once in a while, most of the time in fact. See, my sense is what you're seeing right now is nothing but you know, collapse of the inter-institutional framework in India. That's basically, simply put in layman's language, there's lack of trust between institutions in Bombay, in the sense a bank is not trusting an NBFC, a bank is not trusting another bank, and everyone is fearing the next default is going to come from the neighbor next door. So in that kind of a situation, you know, the entire credit market, the lending borrowing mechanism, the trust of the rating mechanism, everything kind of starts to be questioned. As soon as that happens, you know, fear sets in and there is an immediate flight to safety, which basically is nothing but flight to cash. So if institutions start doing that, you can understand what individual investors will do. Mutual funds are trying to keep cash for redemptions. NBFCs, particularly tier 2, tier 3 NBFCs, are not able to access capital. If they're able to access capital, the cost has gone up very high. So it's kind of a, you know, jam that's kind of developed in the system, which is basically nothing but lack of trust between financial institutions, that's the NBFCs, lending institutions, banks, etc. That is what really has perpetuated the crisis, which is being reflected in the equity markets also. It did begin some time back, and now it's, I think, kind of peaking out.
Sanjay, hi, morning. I'm glad to have you back and glad that you're done with your hibernation. But tell us, as an investor, what is it that you do right now? Do you buy this decline, or do you just wait it out and see where the market finally settles and whether or not there are more can of worms, like for instance in IL&FS, when crude settles down, when there's some stability coming in for currency? Do you wait for those parameters to normalize?
See, the only benchmark I see when I'm investing is that what is the situation on ground with real companies. And I can tell you, after speaking to people, good companies don't have any problem in accessing capital from banks, don't have any problem in selling their goods. Everything is running fine with them. Yes, there are patches where they are experiencing slowdown, etc., etc., but business is normal. Business is going perfectly okay on ground with real companies. There is no real slowdown in the economy. Yes, we do have an impact because of the currency as well as you know, crude, but then all that gets factored into the prices, and I think it's already factored into stock prices. So if on ground companies are doing good businesses, they are expecting, you know, the next few quarters to be better than what they've seen in the past, I don't see any reason why investors should not be investing when things are 20 to 40% cheaper. Yes, you have to be careful because there is going to be a flight to quality whenever fear sets in financial markets. So therefore, at this point of time, you got to be doubly sure of what you're buying in your portfolio. You got to buy only good quality companies, whether they are in financial services, whether they are in the core industries, whether they are in consumer durables, non-durables, or consumption themes. So to say that this is the time to sell and run away and, you know, think about capital protection and those, you know, all kind of jargon that are being thrown at us from newspapers and across media channels, I would simply say ignore them. If you have any money, keep nibbling, keep buying on every fall. If you've invested, and you must reassess your portfolio, if it looks okay to you, you have good companies, you know, just shut your portfolio, log out, change your password from wherever you are logged into, ET or Money Control or XYZ, and just let this storm go away.
But let's get down to specifics about where one should nibble and perhaps bargain hunt in this sort of a market environment. Sanjay, you're saying very categorically that you prefer ICICI Bank and SBI over Yes Bank. Now, we've had an exclusive chat with Rajat Bonga of Yes Bank. In fact, Nikuj caught up with him on Monday. We'll play that soundbite in a bit. But first, give us your rationale here.
See, I'm very clear. Whatever is in controversy, there's going to be volatility. I'm not commenting on the quality of Yes Bank or anything, but yes, we all know the stock is in the news for wrong reasons, the right reasons. So as an investor, I don't want to deal with volatility. I don't want to deal with, such kind of question marks or answers or explanations coming from companies. When I have a big basket to choose from, why do I have to go where there is controversy at this point of time? Yes, I am happier losing something that may be 50% below fair value, but I cannot live with volatility and uncertainty. So I would buy an ICICI Bank. In fact, I'll give you an interesting statistic. I was looking the other day. Banks like Canara Bank, PNB, those banks have basically reached 2004, 2006 valuations. And what you're trying to tell me that what their size was, the balance sheet was in 2004, 2006 and 2018, am I going to discount them at the same size even after all these problems with NPS? Am I assuming that the banks have gone back 15 or 17 years and they're never going to revive? Or are these banks, particularly a bank like Canara Bank with a reasonably large or very large balance sheet, is going to remain at a 16 or 18,000 crore market cap, while HDFC Bank is going to remain at a 5 lakh odd crore market cap? I don't know. I'm leaving the answer to the investor. It depends on the risk appetite. You want to take a call and invest. But anything that's in controversy right now, anything that's grabbing headlines is going to have huge volatility. So therefore, as an investor, I don't want to deal with it because I can't have information flow what the street has. Information flow is always, not symmetric in a manner and not evenly available to everyone. So why do I have to go and, dabble in Yes Bank as an investor? I can trade, I can punt, fair enough.